What is going on today, YouTube? Today we're going to talk about all about gold. We're going to talk about its current price, what it's like as an investment, how to invest in it, whether it's through physical gold or ETFs, bear gold stock, the truth behind why Warren Buffett actually bought a gold mining stock, and no, he isn't going against his investing philosophy, and some of the ETFs out there that you actually own physical gold if you buy them, which is a little different from what the majority thinks. So anyways, let's get started. Make myself a little small, and we are going to look at the current gold price. Alright, so now I got myself down the corner. We're going to check out the current gold price. Recording this video on October 27th, 2020, and gold has had a little run lately. It is currently at $1,915.50 per ounce. Now that's a lot for a little coin. Per ounce coins, it's like the size of between a quarter and $0.50. That's about as big as you're looking at for an ounce gold. But for this video, we're just going to look at the simple chart from 1996 to 2020. Now, why own gold? A lot of people, you own gold because it's a hedge against inflation and it's an insurance policy. What I mean by that is, if we have hyperinflation, the gold price will go up because at the end of the day, it's a commodity. And you know what that means? It's all controlled by supply and demand. Now I want to get down to the biggest argument I have about it, and everyone keeps on saying, oh my god, gold's going to go to $20,000 an ounce. $20,000! $20,000 by the end of the year 2020. And I mean, that's probably just not going to happen. What I want you to understand is you need to quit listening to all the noise out there. So if you look back throughout the history, okay, 2000, we had the little stock market boom, bust, whatever you want to call it, the dot-com, the bubble in stock market. This is just to show it's not correlated stock market at all. Figure in 2000 we had that boom and bust and nothing really happened. Gold price pretty much stayed steady the entire time. So now, on this chart, the biggest so-called Great Depression happened, 2008, right? So one of the big misconceptions I already see is people think if we have a depression, the gold price is just going to skyrocket, right? So check this out. 2008, gold was at an all-time high in 2008 too. So if you look at the past, 2008 and back, gold was at an all-time high. Then we had this Great Depression. Stock market crashed, everything crashed. We thought the whole world was going to crash. And guess what? Gold price even crashed too. Went from $970, almost $1,000 an ounce, to $750 an ounce. That's 25% decrease in gold. During the same period, stock market crashed. Yes, stock market crashed a whole lot more than 25%. But that's just to show you. If the economy crashes, the market crashes, everything crashes, gold price actually follows that. So that's just to show. The stock market would crash, gold price is probably going to go down too. Gold is all supply-demand because it's a commodity, and it's a hedge against inflation, and it's an insurance policy. Yes, there's debate back and forth by saying that gold is not an actual investment, and you know what? By terms of an investment, gold is an investment because an investment is anything you buy today that you plan on being worth more in the future. Over time, you hold it long enough, the gold price is going to go up because the dollar is either going to drop, like it always has since it originated in the 1920s, or we're going to hit inflation eventually, and inflation always drives gold price up. Like I said, I'm going to make a video on that in the future. It's pretty cool. Just look at all the times and the biggest jumps in gold. They all happen around hyperinflation times. So anyways, let's get back to the point of this video. Gold as an investment. If you're going to invest in gold, it does not take much to diversify your portfolio. A lot of the big, you want to call them financial gurus out there, they say what, 5 to 10% in gold? So let's go 10%. That's a lot. But 10%, say you have a $10,000 portfolio. It's just starting out, $10,000. So $1,000 of gold is going to hold you 10%. They are so small, you can put them in your house in a safe or anywhere you want to, and you can keep it that way. And that's your diversification. You don't need to own that much. You see all these billionaires, millionaires out there that have tons and tons of gold. Well, that's because they have a ton of money. If you really want to diversify and keep always 5 or 10%, you need a quarter of this at $10,000 or a half of an ounce. And you diversified yourself between $500 and $1,000. $100,000 portfolio, still, you want to keep 10%? You get 5 of these coins. 10%, $100,000, $10,000, you get 5 of these coins at $2,000 a piece. There you go. That's your 10%. You can store those in anywhere. I mean, it's not that big. You're going to have, it's like a stack of 5 quarters. So that's how you can diversify. Now, okay, so you don't want to own physical gold because you don't want it in your house and you don't want it sent to you, you don't trust the shipping or whatever. You can also buy gold ETFs. Gold ETFs, there's some, the majority, the most known and popular and highest ones are GLD and IAU. They're both ETFs, but guess what? They are not backed by physical gold bullion. And gold bullion is just actual physical gold. It's a coin, it's a bar, it's whatever. So your bigger ETFs out there, like GLD and IAU, they both are not backed by physical gold. Yes, they do have some physical gold and they're backed by it, but you cannot go to them, have shares in their ETF, and then just say, oh, I want to take my gold out. I want to actually have physical gold. Unless you have millions and millions and millions of dollars with them, that is the only chance you have of getting physical gold from them. Now, there are a couple ETFs out there that you can actually get physical gold from them. I think they do it in denominations of months or quarters. And you can actually buy shares based on your share price. They convert it over to actual physical gold. And these gold ETFs, there's 2 of them. It's the VanEck Merck Gold Trust, shown here, and the Sprott Physical Gold and Silver Trust. Now, the Sprott Physical Gold Trust, that's headquartered in Canada. It's right outside Toronto. That ticker symbol CEF, you can see right here. And the other one, the VanEck Merck Gold Trust, that's headquartered in New York. But these are actually 2 ETFs that hold physical gold, and you can actually get physical gold from them when you buy it over time. Like I said, the majority of the ETFs out there for gold, you cannot physically get the gold. You cannot have in your hand, no matter how many shares you have, besides if you have millions upon millions of dollars with them, you cannot get shares transferred to physical gold. And say you really want to diversify, you want gold, you just want to have a little bit of gold. Like I said, you need like a couple coins. Not even a couple coins. You might need one. If you're just starting out, you might need 1 coin, a half a coin, a tenth of a coin, and you can easily buy that over time. Yes, you're going to have to pay a spot price, a premium to get these, but they can be shipped right to your house. And you can put your order in on this stuff online. Like, for instance, the website I was on earlier, this moneymetals.com gold price, they sell physical gold. You can buy it off them. It's supposed to be trusted and supposed to be guaranteed that it's real. Like 0.999, whatever that percentage is that you always get. But that's another thing. If you're buying physical gold, make sure you really, really, really do your research and you're not buying it off of a fake site and getting fake gold. Because if you get fake gold, then yeah, you're not going to have anything. I mean, they have the certifications up here, accredited business and everything else, but just be careful. If you're not buying it, just make sure you're buying it from a trusted place that proves to you that they are actually selling physical, real gold, silver, whatever commodity you want to get. So now, to go into Warren Buffett. Warren Buffett has never went against his investing advice that he has said forever. He buys profitable companies that are low on debt and show a high rate of return, as in their revenues far exceed their liabilities. Their assets far exceed their liabilities. Now, everyone's going nuts because, oh my God, Buffett bought gold. He's going against what he always said. He's not buying physical gold. If he was buying physical gold, then yes, I would say he's going against everything he said. But guess what? He's still buying companies. He doesn't trust in like a precious metal that just sits there. He thinks gold sits there and it does nothing. And that's true to an extent. In reality, the only way you would absolutely need gold is if we're in absolute doomsday. Doomsday, the world's ending, and say the dollar crashes, it's worth nothing, and the U.S. economy is going to it's like perishing. It's not going to even exist anymore. If that would happen, then yes, there would be a point to have gold because your dollar wouldn't be worth anything. And that's why and how you diversify yourself to actually have real gold. But the chances of that happening, and besides, if you had stacks upon stacks of real gold and people knew about it, and the world, the economy was just going to an end, pretty sure you'd be the first one people would be coming to. They'd be robbing you, everything else. So guess what? It's not going to help. So the last thing I'm going to say about Warren Buffett is he's never gone against his philosophy. His philosophy is to buy undervalued companies. And if you look at all of these precious metal mining companies, whatever you want to call them, they have been ignored for a very long time. Buffett only invests in stuff when it's ignored. He doesn't invest in all the hype. He doesn't invest in stuff when it's soaring. That's like the number one mistake if you want to be a good investor. We'll even go back to this gold price chart. So look at this. There's all kinds of hype around gold right now, right? And guess what? It's beating all-time highs. It made a new all-time high. So when you hear about this and the media is going crazy about something, it's the worst time to get in. Why would you be buying now? If you really want to buy gold, you buy it when it's low. It got this last all-time high and it dipped down. And now, yes, everyone out there, media, everything is going crazy and saying gold's just going to keep on going, it's going to keep on soaring. That's what they say every time. They get FOMO with you. So by the time you hear about it, the average person hears about something, and it goes back to all-time highs, that's when a lot of people could be happy with their profits and they start selling off. You want to buy down here. The gold price has doubled this year. You don't want to buy stuff when it's at its all-time high and everyone's talking about it. You want to buy stuff when it's low, around $1,000, around 2015. Then yes, you would have made substantial profits. And if you're in it just to make a profit and go back out of it, then yeah, sell it and you made your profit. One of my theories about this is gold, even though, yes, you can buy it online, ship to your house, or you can sell it online and ship it back to them, right? As easy as that sounds to do, I really don't think it's that easy. So as an investor, you're going to buy something here and keep it forever unless you absolutely have to sell it. And even at that time, if you absolutely have to sell it, you're probably going to figure out a way to hold on to it. So another theory I have, inflation and everything out of the picture. If you look, gold really never goes, I'll say, down for the purposes of this. And I think another reason of that, yes, it goes down a little bit because I think some people sell off, but it's not that easy to move. So that's why you don't see huge fluctuations. It goes, I think people just buy it and they plan on holding it forever. Yes, some people sell and that's why it goes down, but guess what? People are going to buy it up to this level again. And then, yeah, you're always going to have some people that sell. But it's just going to keep on going up in steps and steps and steps over the long term. Remember, you're investing for the long term, not the short term. So what I'm going to leave you with, don't get all mixed into all the hype. No matter where you are in your investing career, you're always going to find someone that says, this is the next big investment. This is the next way to make tons and tons of money. And yes, that may be true for some people. We'll even talk about gold mining stocks for a second. It is very, very hard to actually be profitable, find gold, mine gold, and be a profitable business. But you hear about all these, I'll call them junk companies like penny stocks coming out anytime they can take advantage of the last or current boom. Right now, it's gold mining stocks. These companies come out, they'll say, we stumbled upon gold. Stumbled upon it. That's all they need to say, and their stock goes soaring. This happened with Bitcoin. They said, oh, we found a new way to mine Bitcoin, and their stock goes soaring. There are so many fake companies out there that do this just to get a quick profit or make a quick buck. Don't get trapped in that. When you hear everyone talking about it, it's probably too late. Majority of the time it is too late. You need to get into these investments when no one's talking about them. It'll happen with the stock market again. Stock market will crash. No one will be talking about it. You won't hear it. Everyone and their brother won't be the best stock picker in the world, as you can see over these last 10 years. And you won't hear anyone talking about it. When you don't hear anyone talking about it, that's the time to invest. So you know what? If you like this video, if you learned anything from it, if you want to know more about gold ETFs, more about physical bullion, more about anything related to gold, leave a comment below. Leave a like on the video. Comment below. I'll get another great video out there for you. So with that, see you in the next video.